Analyst, it's going to be Mr. Oliver Slope. He's with Blue Line Futures, coming to us from Chicago. Oliver, what lights your fire there when we talk about these row crops or anything else up in the grains?
Well, wheat has gotten a lot of the attention here recently over the past week and a half, and rightfully so. We had a massive, basically uninterrupted 70-80 cent rally, which was good to see for the bulls. We got out above some big technical levels, which spurred some additional short covering from the funds. Friday's Commitment of Traders report showed funds were net buyers of about 20,000 futures and options contracts, so that trimmed their net short position back to about 76,000 futures and options contracts. Now, it's important to note that that data is through Tuesday, so it doesn't really include the back half of the week. As you'd imagine, they probably covered quite a bit more. But we're pulling back today, and I think it's a healthy correction and probably warranted. We're looking at 590 to 595 for that July Chicago contract as being a big support pocket just above that psychologically significant $6 level. But 590 to 595 is really where the market really started to get that secondary rally and accelerate to the upside. On top of that, that also represents a 50% retracement, which is just a fancy way of saying the middle of the range from the recent lows to the recent highs. So we're looking for a little bit more of a pullback here. Be interesting to see if that gets defended by the bulls here this week.
All right, perfect timing. Just got the wrap. Stay right there, though. We're going to go away, and we're going to have you come back and talk to us about the livestock market right after this. That's 15 cents off the low out there. All right, let's bring in our guest analyst who's been so patiently awaiting the wings. That's Oliver Slope, Blue Line Futures in Chicago. Oliver, thanks for sticking around. Anything jump out at you?
Well, volatility in the livestock market, that was apparent last week, and I wouldn't be surprised to see that continue to be a theme in this week's trade. Last week, we got the gap higher on Monday. We reversed, filled that gap midweek, and then ended the week on a high note, closing at highs for the week. And today we're seeing the volatility again. Ultimately, looking at that June contract, 178.5, that's the 50% retracement. Again, basically the middle of the range from the recent price action. I wouldn't be surprised to see the market maybe fizzle out or at least struggle here. Maybe we can push upwards towards 180, but I think that's going to be a near-term ceiling, especially with the cash market kind of coming down closer to those futures prices. I think the upside is limited. Now, does that mean that, you know, we're going to roll over and see heavy selling pressure and take out new lows? I don't think so. I don't think that's going to be the case. We often look at the funds and Commitment of Traders report. We talked about it in the grain segment, talk about it in the livestock market. The funds really aren't that long live cattle. They're long about 30,000 contracts. So even if we do get some bearish headwinds for this market in the near term, the risk of long liquidation isn't what it was a few months ago.
It's good to hear. All right, appreciate your stuff. Always great content. Thank you very much. Oliver Slope, Blue Line Futures in Chicago. We'll bring it back here to Nashville.